Today, a spotlight on Greenwood, WA. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Today I'm going to walk you through our analysis of Greenwood in Western Australia. But before I do that, I just wanted to go through also what the real estate agency over there is saying about the Perth market, because frankly, once again, they're talking it up. Now, this was posted in the Real Estate Conversation on Friday, and it says, after hitting the bottom of the market during 2020, the Real Estate Institute of Western Australia's 2021 outlook indicates that Western Australian property markets should experience steady growth in both the rental and sales market, something not seen since the strong conditions in 2013. REIWA President Damien Collins said 2020 has been an unusual year for property. However, despite the lull experienced during the start of the COVID-19 pandemic, WA, he says, is showing extremely positive signs. He went on to say sales activity in Perth at the start of the year was sitting at around 2,900 transactions per month, followed by an uptick where we are now seeing nearly 4,200 transactions, he said. Listings for sale have reached a 13-year low, with just over 10,000 listings for sale on reiwa.com, putting upward pressure on prices. Agents on the ground have reported that recently it is not uncommon for sellers to be receiving multiple offers, including being offered thousands more than the advertised asking price, something which has not been seen since 2013, with record low interest rates looking like they will be around for a while. Many buyers are finding it cheaper to buy than rent. This is one of the reasons why we can expect sales activity in 2021 to continue gaining momentum, he said. In 2020, Perth was the lowest median house value in any capital city in Australia. And with the increase in population growth due to people returning to WA from overseas and interstate, this could change in 2021. While house prices were largely stable over the last 12 months, it's expected that prices will increase between 6 and 10% over the next 12 months. Turning to the Perth rental market, he said that after an unexpected 2020, Perth's rental market has reached crisis levels, with the vacancy rate reduced to below 1% due to the flow-on effect of COVID-19. Population growth increased 1.5% during the 12 months to March 2020, and with more than 1,000 international arrivals expected per week, plus the domestic borders opening, the rental market could get more competitive for renters at the start of the year before it gets any better due to the low levels of available rental properties. The limited stock of rentals available has resulted in upward pressure on rents, with the median rent increasing from $350 to currently sitting at $380 per week in the last few months, which is an 8.5% increase. We can expect rents to grow an additional 10 to 15% through 2021, he said. However, even with these increases, WA is still the most affordable capital city to rent across all Australian states and territories. And the positive outlook for the Perth rental market will hopefully attract an increase in investors, he said, looking to take advantage of the favourable market conditions. This will help boost the available supply of rental properties, thereby keeping rent increases to reasonable levels. And finally, with regard to regional Western Australia, REIWA expects the overall market conditions to improve in regional WA during 2021 as a direct result of population growth and changes in lifestyle preference due to the COVID-19 pandemic and general market conditions. Mr. Collins said that we've already seen significant improvements in Karratha, Port Hedland and Kalgoorlie-Boulder during the latter half of 2020, with increased rental demand and sales activity. Increases in certain mining areas are due to companies moving their staff closer to the mining sites to live while the borders are closed. While this has put upward pressure on the rental and sales market, other regional centres are also experiencing lowered vacancy rates, limited rental stock and an increase in median rents, he said. And according to REIWA.com data, at the latter end of 2020, Albany's vacancy rate dropped from 0.9% to 0.4%, Bunbury was down from 3.1% to 0.7%, and Geraldton was 5.1% down to 1.5%. And Geraldton was 5.1% to sit down at 1.5% now. While decreases in rental stock can be explained by higher population growth and lower investor activity, it will be interesting to see how working from home impacts lifestyle choices and if we see an increase in demand for regional properties in 2021 due to people opting for an alternative lifestyle while working from home. Now, let me just say that REIWA has a track record of declaring every year that next year is going to be a booming year. You can look it up. They said it last year, they said it the previous year, and the year before that. So, as with all of these spruiking stories, you need to go granular and see what's going on, which is why I want to look at a specific postcode, and that is Greenwood, an inner suburban postcode in Perth. Now, let me just say, as I always do, that this analysis is based on current available information, and it may change. We don't provide financial advice, and our conversation should not be taken as such. We're just looking at the data from our surveys and economic modelling, and therefore the information is for your personal use only, and of course it will change ahead. And just for those who may not have caught up yet as to what we do and how we do it, we survey households on an ongoing basis, and we take information from multiple sources to be able to analyse what's going on in the local markets. And that locality analysis is critically important in the current environment. And so we can look at individual postcodes and take the mortgage stress data from our surveys, the price trajectory history, the buying and selling intentions from our surveys, the migration data, the economic data, sort of CPI, wages and unemployment, all of those things. We put it through our core market model, and that core market model looks at different scenarios, and we can analyse that at the postcode level or roll it up to a region, state or all Australian level, and that allows us then to comment at an individual postcode level. And by the way, if you're interested in having a specific conversation about a suburb within a postcode, we can certainly do that through our DFA one-to-one service. That's a specific conversation based on our data. We can look at stress and home price trend data and also have some views about where prices may be going. And we normally do that via Zoom or by phone, up to sort of 40 minutes to an hour, depending on how long the conversation takes. And if you're interested, send me a message via the DFA blog. The links are below. And just to say that cost is $250 plus GST, payable in advance. Contact me via the blog if you want more details, and I can send you all the other information that you may need. I should just add, this is a very popular service, and we're booking about 3 weeks ahead at the moment. And so to Greenwood 6024, and I'm going to look at houses because most of the properties here are houses. Now, Greenwood is a suburb of Perth, located in the City of Joondalup. The suburb is about 18 kilometres from Perth Central Business District and is bordered by the Mitchell Freeway, Hepburn Avenue, Wanneroo Road and Warwick Road. And here's a map just showing that location. Now, the area is one of those typical outer suburban areas where there's been quite a lot of building, but also a lot of older properties on large lots. And much of the building is single story at the moment. Very few units, mostly houses and bungalows. And there are some local facilities, for example, the local supermarkets, and more infrastructure is being built so that over time it can become a little bit more self-sufficient, although most people travel to other locales for a lot of the things that they want to buy at the moment. Now, the other interesting thing we can look at is the crime statistics. I often look at the crime data because it does tell you something about the relativity to other postcodes, and the relative weighting is 1.8 crimes per 100 residents in Greenwood. That is below the average at 3.4. And if you look at the best and worst suburbs in and around Perth, then you can see it's way down. There's one called Balga, which is 2 suburbs away at 7.1. And places further out like Mandurah, funny how Mandurah pops up from time to time at 12.9, highlights, again, the high crime areas. So Greenwood is not in a high crime area. Now I'm going to look at houses. As I said, most of the properties are houses, and at the moment there are about 47 properties for sale in Greenwood. Here's a map showing where they are distributed, and if you look at the details, you can see there some interesting offers in the region of 600s, or there's a set date for sale but it doesn't tell anything about the price. You can also see home and land packages are definitely there in the area, and that's one of the things that we've noticed. There's a lot of subdivision and a lot of new building and construction in this postcode and in a few others too. And of course in WA there's been very significant interest in the homeland packages thanks to the $55,000 of grant money which is available between the federal and state governments. Not surprisingly, there's quite a lot of land for sale on which to build. And there is some price information, but frankly not very much at the moment. One of the interesting issues I keep finding when I look at these local postcodes is how little real price information there is. The asking prices are a guide, obviously, but it does tell you something about the momentum in the marketplace if it's there. And there are some offers already being made on some properties, they said, and some where people are definitely interested and wishing to sell. Now, turning to sold properties, about 24 properties sold in the last 8 weeks in Greenwood. And again, here's a map showing the distribution. And you can see there, once again, the portals are reporting last asking prices. That's pretty typical, as you know, if you've been following my shows. There's very little information about settled price information until many months after the deal is done. And agents are pretty coy, frankly, about telling you what's really going on. So the last asking price, which drives a lot of the portal data, is just out of date and does not help, of course, when you're given a range as well. And you can see there home and land packages is definitely flavour of the month. It seems to me that there's quite a lot of subdivision and quite a lot of new build going on in the area. And there are also some older style properties on larger blocks. They're significantly more attractive, but are also commanding a reasonably high price. And prices are a little lower for smaller houses, or indeed the new ones on smaller plots. So you need to understand that this is quite a mixed area with some larger blocks with properties on them. But if you're buying one of those larger properties on a block, you'll be competing with a builder who may be able to subdivide it into 2 or 3 lots. So that's going to put some sort of floor on prices in the area. Now let's look at current price trends, and this is based on the median price. Now, back in 2013, the median home price was $545,000. Today, it's $480,000. So over that period, prices have gone backwards. And you can look at the trends. There was a rise in 2014, up 6.4%, a fall in 2015, down 2.6%, a further fall in 2016, down 6.2%, to 530,000. Another fall in 2017, down 4.7%. Another fall in 2018, down 3%. Another fall in 2019 to $485,000. And a fall again in 2020, down another 1% to $480,000. So in percentage annual terms, the average gain is minus 1.1% between 2013 and 2020. So there's no rise to be seen over the last few months and years. After inflation, that's an average down minus 2.7% per annum. And this is pretty typical of the inner suburban suburbs in and around Perth at the moment, away from the beach areas. So in summary, there are around 140 listings in the postcode, with 49 added in the past month. There are definitely more listings coming on. In fact, 18 have been listed, though, for more than 6 months, and so there are some old properties that are still listed and are not selling. Now, last year, the listings were around 130, and 91% are houses. Now, gross yields on houses are around 4.8%. That's a rise from 4.1% last year. The net yield is around 2.75% and is pretty steady. But the rents for houses are definitely rising, up 24% over the past quarter, with a typical rent of $425 per week for houses. Of course, the number for rent in this area is quite low, as we'll see in a moment. The vacancy rates are very low at 0.4% compared with 2.2% in mid-May 2019. And there's just 2 vacancies there at the moment compared with 15 back in 2019. And the asking price on houses on average are up 2.5% over the past quarter, with a typical house price of $525,000. The average settlement, though, is still lower than the asking. And it's clear to me that the hype of many people bidding all on the same property and driving property prices way above the asking price is fiction, at least in and around this area. The intention to sell is also rising, just slightly, but significantly, as we'll see in a second. So turning to the stress results, there are around 5,400 households in the postcode, around 2,900 are borrowing, about 1,400 are renting, and there's just over 1,000 properties for rent in the postcode. And there are about 1,800 property investors living in the area. The overall financial stress metric is quite low at 18%. That's lower than across most areas of Perth and lower than the national average. For those borrowing, only 20% of those with a mortgage are in mortgage stress. That's just over 580. And there is some risk of default. Some of these are people who have got principal and interest repayment holidays which are coming to an end over the next few months and whose income is being severely dented by the virus and the lockdowns and the lack of economic activity. Turning to renters, there was no evidence of rental stress, but again, the proportion renting is quite low, and as you saw, rents are rising at the moment, so that may change ahead. And there's around 23% of property investors who are in difficulty at the moment, meaning that they cannot rent their property, or they can rent their property, but their income is insufficient to cover the running costs of the investment property. That 23% is lower than the national average. So this is a stable, mature postcode with a relatively low degree of financial stress. And yet, as you can see there, home prices have not done much over the last few years. So when I come to thinking about price scenarios and what may happen, I use the 3 primary scenarios that we run with: the low risk, the base case, and the high risk. In the low risk environment, we expect the virus to be contained, we expect momentum to pick up a bit in the economy, and later next year the international borders perhaps open selectively. In that situation, the rise over the next year could be 4 or 5% for houses, and then a smaller rise in 2022 and 2023. In fact, in net terms, in 2023, we expect prices and the best case scenario to be 1.8% higher. In the high risk environment, that's where the virus continues to assert itself, where the borders stay shut, and where the international borders in particular are still sealed for another year or more. In that scenario, the economic momentum is pretty significantly negative. And in that scenario, we think prices could slide up to 16%. One of the key points to make is that prices in WA are not necessarily that cheap relative to incomes even now. And so there is still some downside risks depending on your economic scenario. But the base case we run with is a very minor fall in 2021, a slightly more significant fall in 2022, and another small fall in 2023. And that's based off 2 things. Firstly, there's more property coming on the market. There are more people going to sell over the next few months. Some of those are mortgage holders with issues coming up. Some property investors are also looking to exit. And there are also some older people who've held property for a long time and looking at the slight uptick in momentum in Perth. At the moment, they're thinking of selling and getting equity out. And so that gives us a scenario of a fall of 1.3% in 2021. So that moves prices from 480 on average to 474. A slightly larger fall, down 4.6% in 2022 to $452,000. Another small fall of 1.4% to $446,000 in 2023. So a small drift down in my base case. And if you take a more positive view, then maybe a slight rise, but nothing stellar over the next 2 or 3 years. And so just to round out the conversation, this is a classic example of an inner suburban area in and around Perth. Many of the other suburbs in the locations are doing quite similarly. They're obviously being impacted by all the new homeland packages and the building boom that's going on in some areas. Existing property is being depressed a little bit by that. But I don't see a massive amount of upside. But on Tuesday, I'll be discussing my latest scenarios, and we can go through the postcode suburb information as well. Here are the details. You can ask me a question beforehand or live via the DFA blog, and I look forward to seeing you at 8 p.m. Sydney time on Tuesday, where we'll update our scenarios for the end of November. And there have been some changes from last month, but nevertheless I'm still relatively sceptical in terms of price momentum ahead. And whilst I discussed with Tarek yesterday reasons why prices may not fall dramatically, all that government stimulus, the 1.8 trillion, it's also worth underscoring that there's a significant supply of properties, there's more coming on stream, there's still some limits to what people can borrow, and of course the broader economic uncertainties continue with regards to employment, JobKeeper, JobSeeker, and all of the other vagaries. And of course China continues to play with our trade. They turned off wine, of course, just over the last 24 hours. So we are in a significantly uncertain time, and that uncertainty, I think, translates through to more trouble for property ahead. So let's be clear, my main view still is that prices will go sideways or fall slightly, but if the economic scenario plays out more adversely than many people and myself expect, prices could fall a lot further. There is very little expectation of significant price rises ahead, nothing like we saw over the last 20 to 30 years. We're just at the end of that runway. So I'll be interested to compare notes with REIWA this time next year and see who was more right. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.